Hi, in this video let us see how the tax is charged on the income received from machinery, plant or furniture which has been belonging to a taxpayer and it is let out on hire. If the plant and machinery etc. is not being let out as a part of assessee's business activity, then income arising from such hire will be taxable under other income. If letting is a part of this business activity, then that income will be charged under business or profession. So it basically means that in case if you're not into any letting out of business, letting out or hiring businesses, but you have been providing your plant and machinery on hire basis to some XYZ party, then any income which arises out of it is taxable under income from other sources. But if you are into the line of business of hiring, then whatever the income which arises will be charged under business or profession head. A small image which makes us understand even more better. So here if you see whatever the income you're receiving from house property, whether it's for business or non-business, you'll be charging it under house property. Similarly, when you're letting out a car on hire, and if that is your line of business, then you will be charging this under business or profession. And in case if you're giving it for non-business activity, then those income will be charged under other sources. The Act allows us for certain deductions with respect to uh, plant and machinery or furnitures which belongs to the taxpayer but which is let out on hire, and any income which is arised out of it is allowed for the deductions under current repairs to the building, in case if there is any repairs which is happening to that building, or in case if there is any repairs for the plant and machinery or the furniture, or if there is any insurance premium which is getting paid up, or in case if there's any depreciation which has to be calculated on the building, machinery, plant and furniture, or which in case of unobserved depreciation, then those things will be deducted, and whatever the balance amount is left over, on that we'll have to pay up the tax. So unobserved depreciation here means that in case it takes place when one is unable to observe a portion of depreciation in the books of accounts, but that is maybe with respect to in case if the company is running under loss or is not having sufficient profit, then that's called an and in that case they are not be able to allocate the sufficient depreciation. So that will be unobserved depreciation and will be carried forward to the next year. Let us find this with as an example. Mr. Alex has let out a car on rent for 1,20,000 during the previous year 1920. The car was purchased in year 15th April 2018 for 2 lakh rupees. The repairs and maintenance cost incurred was 30,000 in the year 1920. So let us compute now what is the taxable income which is going to be there in the assessment year 2021. So here car was let out for 1,20,000. Then we'll have to compute the depreciation here, as car was purchased in the year 2018. So for 2018 and 19 we'll have to compute the depreciation as I've shown in the table down below, and that particular depreciation has to be deducted from the car rent value. Then the repair cost of 30,000 which is being paid, that also has to be reduced, and whatever the balance is left out after all this will be taxable. So one of the important topic which we really need to understand, the income arising out of composite letting of machinery, plant, furniture and building. If that means that in case if you're not able to separate the plant and machinery from the building, and that has been let out for hire, then the income which is arising out of it has to be shown under income from other sources. So this image gives you a description, like in case if the rent is received from the house property, then it goes directly where you're able to separate it, then the income will be falling under house property. But in case if you're not able to separate the income out of the property or the facility which has been provided, then in that case you'll have to provide it under other sources. Find it with as an example. Mr. Alex has letting out a building on a rent for 2,40,000 in the previous year 2021, along with the facilities of gas, electricity and water. The repairs and maintenance expenses cost incurred in that year was 2021. Now 2021 is 20,000 on the building and 30,000 on the payment of electricity, gas and water bills on the tenant. So now we have to compute what is the taxable income. First of all, we have to mention the rental income, that is 2,40,000. Then we have to reduce the repairs and maintenance of the building, that is 20,000. Whatever the electricity and other charges which is getting paid, that has to be reduced, that is 30,000. Whatever the balance is left out, that will be the taxable income. I hope this has been clear. In case if you have any doubt, please drop in your comments. I will get back to you with respect to that. Thank you.